Sometimes history doesn't just creep forward, it pivots hard, all in a single week. And in the world of finance, December 2025 was one of those moments. It was a fundamental shift that completely redrew the map for banks, for crypto, and for startups, basically ending an entire era of rules.
And you know that famous Mark Twain quote, "History doesn't repeat, but it rhymes." It is the absolute perfect way to look at this, because what we're talking about isn't just another boring policy update. Oh no. The events of this past December feel like a powerful, powerful rhyme with financial shakeups of the past. It's signaling that a brand new verse is being written for the whole system. And boom, this slide right here, it just nails the core of that change. On the left, you've got the symbol of the old world, a restricted guidance document from 2013 that puts serious limits on what banks could do. And on the right, a 2025 document that just says open. This isn't a small tweak, folks. This is a complete 180. So what exactly was this old, restricted world? Well, for over a decade, banks were stuck in what pretty much everyone called a regulatory straitjacket. The main rule was something called the leveraged lending guidance. And the key thing to know is it drew a really hard line in the sand. If a company's debt was going to be more than 6 times its earnings, regulators basically said, nope, not going to happen. This was their big answer to the 2008 crisis, designed to keep banks from taking on way too much risk. But, and this is a huge but, that rule had this massive, unintended consequence. See, the demand for that kind of high leverage lending, it didn't just vanish. Instead, over $3 trillion of it got pushed out of the regular banking system and into the shadows, into the world of private equity. That is a staggering amount of money operating outside the normal guardrails. Okay, so you've got $3 trillion floating around in the shadows. The pressure is absolutely building, right? And what happened next wasn't some slow, gradual change. No way. It was a rapid-fire demolition of the old system, and it all went down in just a matter of days. Just look at this timeline. On December 5th, the regulators don't just tweak the old lending rules. They rescind them. They just rip them up, gone. Then, only 4 days later, on December 9th, they drop 2 more bombshells at once. First, they throw the doors wide open for banks to get into crypto. And on that exact same day, they put out a memo telling banks, hey, get back into lending to startups, even the ones burning through cash. The dam had officially broken. So let's talk about that crypto guidance. What does it actually mean? The key phrase you gotta know is riskless principal. Basically, it's a model that lets a bank handle crypto trades for you. Buying, selling, the whole deal. But, and this is the crucial part, the bank itself never actually holds the crypto. It never touches their balance sheet, which protects them from all those wild price swings. Yeah, let's just cut to the chase. What this really means is that your traditional insured national bank, the one down the street, it can now be your Bitcoin broker. Simple as that. It is a huge, huge step in bringing crypto into the mainstream financial world. So you've got to be asking, right? Why all of this and why now? It kind of looks like regulators just threw caution to the wind. But the real story is so much more interesting. It's about a fundamental shift in how they even think about regulation. It's a move away from hard and fast rules and straight towards data. Okay, this slide right here, this is the key to understanding everything. The old way was what you'd call process supervision. Regulators set up hard rules, like that 6x debt limit. It's like they were putting guardrails on the highway and saying, stay inside these. The new way is transaction supervision. Now the message is, you know what? We're not going to tell you what to lend anymore. We're just going to watch how you manage the risk. They're taking the guardrails off because they think they've installed speed cameras everywhere, watching every single move. And that is the connection. That's why this is such a pivotal moment in database history. This entire pivot is built on one single powerful bet. That modern data analysis, this new supervisory technology, is now so good that it can spot the big risks and catch failures in real time before they blow up the system. It's a massive, massive bet on the power of data. So if you're a bank right now, this is a moment of pure liberation. They are cheering. As you can see, they now have the freedom to jump back into that really profitable leveraged lending business. They've got a clear runway to get into the crypto market, and they're literally being encouraged to go fund the next generation of startups. For them, the straitjacket is officially off. But all of this leaves us with one really provocative final question.
We've just traded a world of clear, if kind of restrictive rules for a world of incredible freedom and incredible surveillance. The old guardrails are gone, but the new digital eyes are just getting warmed up. So the big question is, what happens next?